Yes, so John Williams spoke today, this morning at he's the if you don't know, he's the Fed president for New York Fed president there, and he is a voting member on the Fed. And so he is actually calling for a rate cut in December. The rate cut had sort of been taken off the board. It was only like a 30% chance there was going to be a rate cut in December after the last Fed meeting, and then the Fed minutes came out and everything, and it just didn't look likely there'd be a rate cut in December. But he is calling for a rate cut in December. He's pretty influential, so it could mean something. After he came out with that statement, the chance of a Fed cut in December went up from like 30% to around 70%, it's my understanding. And as a result, the market has moved today in a positive direction. So, just to get into that a little bit here and share some of that information. Let's see. Yeah, so you should be able to see that now. But if you can see here, the 30-year bond is really moving nicely. And where we really want to be is to break above these two resistance lines. There's a the white line is the 50-day moving average. The orange line is the 25-day moving average. And if we can break above those and maintain it, there's a lot of room to the upside to get back to where we were back here. Um, before the market kind of went the wrong direction. So that's pretty exciting news. Hopefully we can get there. Right now we're up. This keeps going up higher. We were at like 9 basis points. We've more than doubled that in the last hour to 18 basis points now. So hopefully that keeps happening. And then we always want the 10-year going down at the same time. And as you can see, there's a resistance line. We made it below one resistance line today, which is the 50-day moving average. And if we can get below the other resistance line, 25-day moving average, to stay below it, these two things working together, get below this and maintain it. And then over here, get above this and maintain it at the same time. That's going to be super positive for rates, and we can probably expect some momentum next week and the rates to come down as long as people continue this expectation. What John Williams was saying, and he's absolutely accurate, is that some of the Fed members are not looking at the labor and job statistics appropriately, and that the labor market is really struggling. And there's a lot of data that shows that. And so that's the big issue. The labor market has really over the last year or so, you look back at January, and the unemployment has gone up dramatically, and people who are on unemployment have sustained being on unemployment for a lot longer than normal. So that's the key issue here as far as what we're looking at. So we're at 18 right now, and we are coming very close to the end of business today. We have a little bit of time left before the end of business. Looks like the 10-year did get below this line, and then it came back right on the line. So we're fighting it right now. This needs to get to 5 or 6. This needs to get to like 20, and this needs to get to negative 5 or 6. This needs to get to like 20, and then we'll be in good shape. But that's what we're looking at right now. So hang in there, and hopefully we have some really good news on the horizon. If it does look like there's going to be a December rate cut, they'll go ahead and price that in now, and so we'll be in great shape. That's pretty much it, and I'll talk to you later. Thanks.